What's up, YouTube? So I'm back with another one, okay? So today we're going to talk about what day trading is, all right? I'm just give you guys an explanation of what day trading is and why people do day trade, and as well as why I prefer not to day trade as much and just kind of look towards another way of, trying to allocate a lot of money, okay? So what day trading is basically people who buy and sell stocks in the same day, pretty much. That's pretty much the basic information. So they buy and they sell a stock hoping, they buy a stock hoping that it increases in that day, and they sell it, okay? So they don't want to hold it for a long period of time because they know that that stock is something that's not worth holding. And if they do hold it for a long period of time, there's a possibility that they can lose all their money, okay? So they buy that stock hoping that it goes up within that day, and then they sell it. So basically how this works is, day traders usually look for penny stocks, okay? So usually look for stocks that are like maybe like $1 or less, or like 30 cents. And they basically, what they do is when they find stocks like that, they basically just buy a lot of those shares, right? So they put in like $500 and buy a bunch of those shares, right? Hoping that, if the share that they bought has like a 10-cent increase, that can, have them gain some money pretty easily, actually. So if you have a stock that's 30 cents and you buy 1,000 shares of that, and it goes up just by 10 cents, you've probably made a decent amount of money, okay? So that's how they go. That's what they believe, and that's how they go by it, okay? So it's pretty much what they do. So, but to me, there's also different levels of day traders. So you can have people who basically swing trades. So when they buy a stock and they hold it for like a day or two, and then they sell it. But those people usually do that because they feel like it can still go up, right? Or they just don't want to add another day trading charge to their thing, so to their brokerage. So basically, with day trading, I think on Robinhood you get like 3 strikes if you do like 3 day trades in a week. It counts for you, right? So you can only do like around 3 to 4 day trades in a week, right? So then if you do more than that, you get marked as a pattern day trader, and that means you cannot day trade anymore, and you have to have at least I think was like 25,000 in your account, something like that, before you can day trade again. Or it's or you wait for months. Like they have like a thing where you wait like months before you can day trade. You can still buy stocks, you can still swing trade, but you can't buy and sell stocks in the same day. And I try to avoid that because sometimes I like to buy a stock and sell it in the same day, but I don't usually do that a lot, because to me it feels like people who day trade, they're always running after a stock. Like they're consistently chasing something. They're consistently chasing stocks, like chasing penny stocks, chasing things that they think is going to go up, and not to hold it for a long time, but just to make a quick buck, which is, there's nothing wrong with that, but it gets to be too much, okay? So swing traders, they tend to hold their trades, and they kind of go in for maybe I would say maybe a slightly smarter investment. Maybe something like Macy's, which is down like $4. Maybe they buy it hoping that maybe in the next couple of months it goes up and they can sell it, which is not bad. I prefer swing trading, honestly. So to people who don't want to have long-term investments, okay? So that's pretty much what they do. Even with day trading, so there's people who just kind of chase after penny stocks, or stocks that are worth $1 plus. Like they chase after like biotech stocks. They chase after just like super small companies, so they can put in as much money as they can to get a maximum return. So if you're buying a company that's like $28 and you only have like 500, and they go up like $1 or $2, you're not gonna make as much as you would if you bought some stocks that were worth 30 cents and they went up like 40 cents or 50 cents, and you'd make a considerable amount of money. So that's just how it goes. And but there's even different types of day traders again. So there's day traders who just go after penny stocks, like I was saying, or like really low value companies, and there's others that go after, who have a lot of money to blow around, and they go after considerable stocks, maybe not too big, but they go after some nice size companies. And what they do is they wait for earning reports, right? So earning reports is basically when a company, every 3 months, a company or a stock they give out their earnings of what they've actually made, I think in those 3 months, and see how their company is doing basically. So they do that every 3 months. And if it's like, if it beats expectations, right? If it goes higher than expectations, the stock usually rises. But if it goes below expectations, the stock usually declines. But there's different ways. Some can be below expectations but have like high revenue or something like that, or make more, and the stock goes up. Or some can be like, it just depends. They usually watch out for earnings reports, and when there's an earning report, they're like, okay, this stock, if they see the earnings report is positive and it's good, they know that the stock is going to go up, so they buy a lot of it in that time frame. And when it goes up, like, when it shoots up, they sell it. That's a little smarter to me, but even then, that can be a little detrimental because you never really know what a stock is going to do nowadays. You really don't know. So it's always best to just invest for the long term, okay? And, that's what I'm trying to teach you guys, invest for the long term. I'm going to go into options trading as well, and maybe dive into a little bit of Forex too, So this is just my day trading info of what day trading is. You guys deal with it what you want. So just know that if you're day trading, you're going to be constantly chasing after stocks, I like just running after, what's the hot one, to putting your money to, hopes it goes up. And if it goes down, you're just worried all the time. You're checking it consistently, like you're just bothered by it. So I feel like, I don't want to be bothered by my investments and have to check it consistently throughout the day or something like that, or feel some type of way when it's going down, like no. So, day traders go through a lot of that, but they also make a lot of money too, just depending where you hop in as well. But they also lose a lot of money too. So yeah, so basically this is everything about day trading. You guys, if you like this video, please like, comment, and subscribe. Turn on the notifications, everything. Thank y'all, and I'll be back with something else. All right, peace.